If you generally want to become a profitable trader quicker, this is the 6 months blueprint you need to follow. Imagine being able to finally quit your job and trade full-time and make a decent living from payouts made of prop firms consistently. This same freedom is exactly why I got into trading too. And yes, I wake up as late as 11 a.m. The reason is because I'm not answerable to any boss. I run my own life. I helped hundreds of people, students, employees, small scale entrepreneurs make this freedom their reality. Now it's your turn. I'll give you the same exact system and plan I gave them that is actually going to also work for you, which is a 6 months plan. You can congest it to lesser time, maybe 5 months, 3 months, or 4 months for quicker results, but that's on you. Now listen carefully. The first month plan and the 6th month plan are the most vital to your journey, and you don't want to skip any of those, because if you do, then there is no point watching this video because it's all going to be incomplete information. Month 1, unlearn to relearn. That's the first month plan. Now the thing here you need to understand, when I mean unlearn to relearn, if you're coming to the trading industry, you need to set a lot of things right up in your score. A lot of us went to school and we see failing as a big deal. Nobody wants to fail exam. In some countries, if you fail, you are repeating, or they are expelling you out of the institution. So failure is horrific. And most of you are watching this video also do 9 to 5, and you are also used to earning a particular amount every month. Whether the company does well or not, you earn your paycheck. The company growth is not your business. You do your work and you earn your paycheck. Now, if you come into trading with these mindsets, you'll be screwed up, because first things first, you'll fail a lot of times. Second thing, the income is not going to be as static as a salary. It's not going to be the same every time. You're going to have bad months, bad weeks, and everything. And you could do everything you ought to do, put all the hard-earned work as possible, and still earn a month in negative. But then these are things that are normal in the trading industry, and you have to get your expectations right, or else you're going to suffer even more. So the first thing you're going to do in month 1 is getting your expectation right. Trading is not a get rich quick scheme. Trading is something that will get you rich, but that will be dependent on the capital you have in your trading account. I know there are prop firms that would help you scale up, but then you have to build your skills for a long time and with so much dedication before you can be able to get funded with big amounts of money that would make you quit your job. So expect yourself to make lots of mistakes at the beginning, because it's going to happen. The next one, month 1, is plan your learning schedule. One of the things that really affected me negatively is learning every time, learning round the clock, because I was so obsessed to change my life. This really affected me because I started having information overload because I was always learning. Now your schedule has to be between 2 to 4 hours every day. What you're learning, you have to be focused without any distractions, so that you can get as much information as possible in that time window, and then go about your day's activities and do whatever you want to do. And it's best if your learning time is very early in the morning for brain efficiency sake. The third one is create your journal. Now this is very important. This factor, without your journal you can't be profitable in this business. It's not going to be possible no matter how hard you try, because your brain is not built to arrange informations like a journal would. So creating your journal, I don't mean physical book, I mean something like Notion. Okay, if you watch this video, watch the video that is going to pop up. You're going to learn how to set up your Notion from scratch and use it to gather information about your experience. That video is really going to help you. So for the second month, get your tools ready. You gotta learn the basics. Okay, so when I mean the basics, if you're coming into this trading industry for the first time, you're gonna learn the basic pips, lot size, how to use trading view, how to use MT5. If you already know these things, well, that's not gonna be a problem. But if you don't know them, you have to go back to them, and the easiest place to get them is babypips.com. The next is learn liquidity. Now you need to understand that every high and low in the market are all liquidities. Some people don't know how to mark a high and a low. Now this might look too casual, but some people be marking candlestick wicks. When we talk about a swing high and a swing low on the charts, you need to learn how to mark it, because it's your foundation in understanding liquidity, where price is going to attack next, where price is going to next every single time. The next in month 2 is learn all the ICT PDRAs. So when you hear about PDRAs, I'm talking about FVGs, I'm talking about now there are a lot of videos on YouTube that are going to teach you how to identify FVGs and the rest of them. By knowing how to identify them, you're training your eyes to see them easily on the charts. Month 3, here we go. Structure and direction. Now, this is very essential. So, one of the things that make traders fail is a lot of traders trade patterns. So, double tops, double bottoms, wedge, inverted head and shoulder, or even 2022 model and some other break and retest thing. So if you use these patterns alone, you would have a poor win rate. You would lose most of the time. You need to understand where the market is going to long term. If the market is bullish, double bottoms will be found, and most times it's going to work. If the market is in a bearish momentum, you will see double tops and they'll most likely work. Same goes to other ICT patterns like the unicorn model, the silver bullet, and the rest. If you don't have a strict bias you're working with, you will just trade these models anyhow and you're going to lose money. So learning direction and structure is very important. So the first thing you're going to do in this month is learn advanced market structure. So there are many ways to get your bias and draw on liquidity in the market. There's just so many ways, but the one I am most comfortable with that has given me and my students the results I always talk about on this channel is using the market structure to get bias. And this video up here is going to teach you how to do that. I made both a part 1 and part 2 of market structure. This video up there is going to help you know how to map advanced market structure. The next you're going to do in this month is learn draw on liquidity and daily bias. Now, what is draw on liquidity? That is actually that target where the market is gravitating towards. Okay, now daily bias rather is a particular side you're choosing for every day you come to the market. So for every day you come to the market will either buy up that day or sell, or maybe range. As a trader, you need to anticipate what the market will do during your trading session. If the market is going to buy, you don't want to be caught selling because you're going to lose, and if the market is going to sell, you don't want to be caught buying, you want to lose. So you want to know the bias, and you get this bias by understanding how to draw structure. From the structure you have learned in advanced market structure, you'll be able to map your way to know where the overall market bias is, and then when you drop the lower time frames, you're going to know the short-term bias, which we call daily bias for that particular day. Is the market going to be bullish or bearish? And we even have session bias. In London session, will it be bullish? In New York session, will it be bearish? This structure is going to help you know. And when you have that bias, then you have a draw, a particular target, which is mostly a liquidity or a fair value gap that we are going to trade towards. Learn the ICT 2022 model. Now, this is an entry model. And like I said before, the entry model is kind of useless if you don't have a narrative or bias. It's going to fake you out more than not, because it's appearing every part of the charts, everywhere. Break or structure, return to FVGs are just showing up. So you need to have that special narrative to literally know where the market is going to. So this is important, because if you know your draw on liquidity, trade towards that draw on liquidity. Month 4, study and forward test. I suffered a lot doing the wrong thing in this phase. Now, I see a lot of people talk about back testing. Backtesting can be very dangerous or detrimental to your trading. When you don't understand your strategy or your edge properly, going into the market to do replay will ruin your mental health, will send you to anxiety. You will do too much, and even during the back testing, you would find yourself derailing from your trade plan. And what happens is you're going to have poor backtest results, which will send you on a tilt in reality. So you don't want to backtest now, you want to study. Studying is working with what? Hindsight. You want to look at price, what it has done in every given day, or in the past week, or in the past month. You want to read price. You want to see where you would have entered, where you have exited, how price reacted to that strategy you're learning. Now, this is going to help you understand the strategy even more and know how to use it and apply it even in real life. Now, backtesting should be withheld for some time until you have been able to master that system, because backtesting is for gathering stats of strategy performance, while studying is to know the strategy for what it is. So on this month, you want to study recent price action. So when you're studying, you have to also be careful, because if you start studying very past data, it could have some kind of psychological effect on your head. You want to study recent data, like last week, last month highest, or like maybe last 2 months, last month, this week, on diverse pairs. You want to study how the strategy you are learning, how you are developing it. You're watching this video right from daily bias to entries and all that, and you need a private guidance on how to understand these pillars of trading. Send me a DM right now or when you're done watching this video, the first link on the description is my Telegram chat, my Telegram DM. Just send Forex. I'm going to talk about your struggle, and every of these plans you see in this video, I'm going to help you walk through them to become a better trader in 6 months or maybe less. Depends on how dedicated you are to this thing. But if you're capable to do this work on your own by YouTube videos and some other materials, then good luck, you can do it. Just make sure you follow this plan. Next is execute during Q zones on demo. Now we have the London Q zone, which starts 2 a.m. Eastern time to 5 in Eastern time. Now I don't care where you are in the world watching this video, make sure your time or your trading view is set to New York time. 2 a.m. Eastern time to 5 a.m. Eastern time is the London Q zone, and 7 a.m. Eastern time to 11 a.m. Eastern time is your New York Q zone, and these are the Q zone for currencies. Indices have something different. Now the whole point of forward testing is executing. Now if you're not executing, you're not forward testing, because you want to put in some bit of demo risk and see the outcome. You want to be able to manage the trade in real life. You want to be able to see the trade work out or hit stop loss, so that you can have data to journal. You can see and improve what you're doing. The next one, journal every experience. That's it. How you feel before you take the trade, how you feel during the trade, how you feel after the trade. Your journal needs to look like this, and this is how my journal is, and this is how all my students were taught how to journal, because there will be times you run into losing streaks. There will be times when you have difficulties in your trading. The only top advisor that would get you back on your feet is your journal. Your journal will tell you all what you've been doing before that worked. Your journal will tell you where you had inconsistency in your actions so that you can change. Your journal is where you write the do's and don'ts. Your journal is the engine room of your trading. If you don't have a journal, or you don't journal effectively, having a journal is one thing, but are you journaling effectively? If you journal and you don't have the screenshot of every single time frame you looked at before executing, then there's a problem, because when you're going back to review those trades, you can't even see the charts that made you decide to sell or buy that pair. You need to see the chart, what you were thinking, what you marked up on the chart. That's when you know how to improve. Journaling is way more important than almost everything I'm talking about here. Trust me, it's just too important. 5, mastery. Now in this mastery phase, as a result of constant journaling and forward testing, you start noticing things. You start finding that you're not making those mistakes again. Before you take a trade, you might forget and skip steps. I usually tell my students these things. If you find yourself skipping steps, forgetting steps, create a fucking checklist, which I did. I have my special checklist, which you can see right here, and every single student I mentored used this checklist. And the thing is, after using it for 1 week, maybe 2 weeks, you get parts of you, and now you make those decisions without thinking or forgetting any step. So this is mastery. When your mind starts adjusting to trading properly, that's when the mastery is coming in. You can now wait for your setup to show up, because you know you did it before and actually lost 2 trades that day because you did not wait. It's in your journal. You read your journal and you conclude on these things and you write your do's and don'ts. That is bringing you into the mastery phase. Mental capital. Now when you hear mental capital is way even important than your monetary capital in your trading account. Now why is this? If your mental capital is poor, you're gonna blow your account. If you had a bad day, if you had a bad day in family, or something happened that makes your emotions all over the place, you're gonna lose money and do stupid shit. Or if you're somebody that is so performance oriented, you always want to perform, you always have that ego, and then you go into a losing streak, it might make you lose self-confidence, which would even make you have what we call risk aversion. You get scared of placing trades, you get scared of risking the normal amount you risk because you fear a loss and anything that will hurt your ego again. Now mental capital is practically psychology, which is 90% of what you have to get in place, and the only way you fix these things is by journaling your behaviors before, during, and after every single trade. This is the only way you can track these things. This is the only way you can become a better trader. Trust me, I can't tell you stop revenging. You have to know that revenging is bad by losing to it, okay? By losing to it severally and realizing it by yourself. So when you put it down in the journal that after a loss you felt angry and you decided to make back the money, if it's in your journal, then you can now create your do's and don'ts. I will never do this. That self-introspection you did, that talking to yourself you did, it's more than anything anybody can advise you or instruct you to do. So that's where the discipline and the mastery start coming in, because you now know this thing is very detrimental. Otherwise, if I tell you stop revenging, well, you won't stop. Risk management. Now risk management is very linked to psychology, because trader A could go through a 10 losing streak while risking 1% of his account. It's going to be then 10% and still have the mental capital to keep trading. Trader B always risks 5% per trade on his account, and he had a 10 losing streak and is now 50% down. Now, who do you think will perform better after now? Trader with the 50% drawdown will be scared, take more trades, will be scared to risk, will be scared to do what he's supposed to do. He would become more pessimistic about his trading. But the guy with the 10% drawdown can still forge ahead because he still has 90% of his account to go. So risk management is very important. Your risk management should be determined by who you are as a person, how much you would love to put on the line. And if you go into a 10-20 losing streak, will that money destroy your account? If it will destroy your account, meaning you need a lot of reduction of risk to do. Take risk management really seriously. Risk management is so important that if we even move to the dynamic risk pattern, whereby you know your A, B, and C setup, for all the A setups a different risk, for all the C or B setups you risk lower. Now this would help you at least not miss out on opportunities, because trust me, they'll get to a point in your trading whereby you know this particular variable of my strategy is important, but it fails sometimes, it works sometimes. It doesn't have a good win rate, doesn't have a high win rate, but it works. Now if you've had losses with those kind of things, your brain could tell you, man, this made you lose before, don't use this confirmation, or don't go in yet. But the truth is, as long as you know there are times it has made you money, there are times it has not made you money, all you have to do is what? Risk lesser on it, because it's now probability, and even if it doesn't work out, you don't lose much. So that's where the dynamic risk come in, and you can see it's all related to psychology. Risk management is just so important that people don't talk about it enough, and it pisses me off for real, because it will ruin your trading if you don't know it. Risk management keeps you in the game. 6, be consistent. I hear a lot of people say consistency. Some people think consistency means making profit from the market back to back every month, or every week, or every day. No, there is no time you're gonna get to that part in the market. It's not possible. Don't be deceived. That's why the first thing I started with in month 1, I said get your expectations right, because if your expectations are because of what social media says, you would put too much pressure on yourself, and you're not going to learn the skill because you are expecting too much from yourself and from the business. To be consistent, it means you need to have the same line of actions regardless of the outcome. That's it. If you win the next trade the same way, if you lose next trade the same way, because there'll be times in your journey where you have losing streaks. There'll be times in your journey where you lose 8 times in a row, 5 times in a row, even 10, even 15 is very, very possible. So what do you do in this time? Consistency. There'll be things to adjust. Yes, your journal will tell you things to work on, but the idea is you are not going out of those rules you are working with. The first thing is keep journaling. That's a consistent action. You started with it, now it's gonna take you far, and you are never supposed to leave journaling behind. You're gonna journal for life as a trader, because businessmen have the big registers and books and ledgers where they keep transactions. Trading is a business. Treat it like one. Start a backtesting routine. When I talk about month 6, if you've been doing everything I say you should do, the appropriate learning, and also if you just joined the academy too, this is a time when you can backtest. You now know the strategy, you've mastered it. Now you know in and out. You can now gather stats, because you're gathering stats to build confidence. The other time you were studying to know the strategy. Now you know the strategy, you want to replay it and do it over and over again so that your confidence can be tight. Whereas if your confidence is tight with it, no matter what happens, losing streaks, break-even streaks, or anything, you would stick to the plan of your strategy every single day. Create a small account. I see a lot of people jump from learning strategy and they're already doing a live account. That's why I said demo first. When you are learning, when you're trying to get something right, both the little limited time factor you attach to this, plus the fact that you're not using your real money, is going to reduce the pressure by a very large percent. Okay, you would not be online searching for too many things, trying. You'll be calm. Now that calmness is going to become part of you, and that's why the demo is needed. And now that you have known the strategy, you want to implement that calmness, but on a small account, so that you can still be calm. Now the next is pay attention to winning and losing streaks. When you're winning back to back, still journal your trades. Don't skip any of them. Journal the time frames you looked at. Make sure everything is intact. When you're in a losing streak, what should you do? Compare losses. Maybe 5 losses in a row. Put these losses and check them. What is common amongst them? Is it the timing of the trade? Is it when I took the trade, the confirmation I used? Is it about the structure, what is common, and you would find something common, and that's exactly what you need to eliminate. And not changing your full strategy or talking to everybody on Twitter or Instagram asking dumb questions. You can just, some people I know will go and meet somebody, what's the best pair to trade, what's the best session to trade. You want direct yes or no answers, but these are different experiences and different people, and if they tell you what they do and you go and apply it, you're not going to see the same result because you don't trade like them. You don't have the same foundation like them. So your journal and your studying should tell you what works more often than not. Get a small funding challenge. Now, this is very important because you don't want to add so much big capital to your trading account. Rather, you want to buy a prop firm because financially it's wise, and if you pass it and get funded, the returns you're going to make is way higher than any money you've spent on that challenge. And that's why investing in a challenge is very ideal. It tests your patience, it tests some other things. And I need you to know, understand something, that somebody that fails his challenge isn't a bad trader, because you will fail a lot of them. Trading prop firm is a business, and what works in the business is if you invest $500, get 100k account, and you lose it and you buy again, and you lose it and you buy again and you lose, and maybe the fourth one you pass it and you get a payout of 2k, 3k, you've covered all that crap. So I'm not saying you're going to lose 4 challenges in a row, but in case you're in a drawdown, you're trying to lose, and you're watching this video frustrated with prop firms, I need you to know their rules doesn't define you as a trader. It's just their rules. Passing it or not doesn't change you as a trader. What changes you as a trader is how you see this thing, and you don't see it too highly so that you don't screw yourself up when you're with a challenge, because it's just a demo account. One thing you need to know, this 6 months plan might look casual to you, but this is exactly the plan I followed. This is exactly the plan every student in my academy followed. This plan has changed life, because what makes trading hard is overload of information, or putting information at the wrong time, spending too much time on chat, or spending less time on chat, or not journaling, or not doing one thing or the other, or having poor expectations. I bet you these plans and these routines will change your trading. And I wish everybody watching this video that's still struggling the best. I want you all to make money from this thing, and many of these informations I put out here on my channel are not on YouTube, and this is the more reason you need to be part of the community. Subscribe, because we are making a whole lot of money in 2025. If you watch this video, really enjoy, you have questions, you can leave it on the comment section or even on my DM on Telegram, link in the description, the first link. The next video coming up is going to improve your trading. I'll see you guys in the next video. Peace.